Hey guys, welcome to another Trade Genius podcast. Well, we got the CPI report. It came in hotter than expected. And the worst part is, it's not even reflective of the actual real CPI that you and I deal with, and that is our day to day living expenses. We're going to dive in because, guys, they really want us to hurt.
Trade Genius.
Hey guys, I'll tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Thanks for listening.
Yeah, so Bob, the number came in hotter than expected, but as you dug in, because you dug into some numbers here, man, it doesn't even reflect reality that you or me or any of our viewers really have to deal with day to day right now.
Yeah, Phil, first of all, they changed the way in which they calculated it. It would have been 0.4% higher if they would have just left it alone. So instead of 6.4, it would actually have been 6.8, number one. And number two, it's still not reflective of reality because they're playing games in the futures markets, as you know, to suppress commodity prices, which aren't what the industry players are paying. It's just what you see as a headline. And so it's a problem. And, in addition, Phil, it's like we're actually troughing right now, because, we're now in the middle of February here, and we saw how the pricing's looking coming out of the end of the year till now, and we're looking forward now into what's happening with in China and what's happening in the retail side, which we're going to get to in a second. And I think we're going to see an acceleration of costs. Here's the one that blew me away, and I had to throw this chart in here. This is the shelter and rent costs in here, and it's 7.8%, Phil. And look, I think where people have to live, rents are not abating at all. They're going up, and it's a problem. And so I think people are not really realizing that, when I look at my budget, in fact, we just did one for this year for my family. My first category is shelter. My second category is auto expense. My third category is food, and my fourth category is medical, and everything else I have under there is just called miscellaneous. And I defy you to find me any of those four things that rose less than 6.4%. What are your thoughts on that?
No, I agree. In fact, maybe we can skip to this next slide because I think that it ties right into your point, right? So overall, at the top there, overall CPI 6.4% year over year, and everything else that matters is double digits. There's nothing in single digits, and I know that that's a fact because I see the bills coming in, and everyone, it's funny. We did that egg video, right? And all of a sudden, eggs being the thing was hitting the headlines. We were kind of early on that one, but look at eggs, 70%. I mean, we knew it was high. That's why we did that video. Eggs are the new Bitcoin because the chart was going parabolic on that, like the egg commodity futures or whatever. So yeah, I mean, I agree with you. Like everything, I totally feel it. Everything that you just mentioned is hitting harder in the last 12 months than it ever has.
Yeah, and when we were doing the prep for the show, you saw my wife walked in and showed me some of our medical stuff, and she's like, "This stuff's going up every month."
Right.
And the CPI report's not shown on this chart here. It's saying it's negative 3%. What a joke. And then Biden had to release SPR again because he's desperate to keep oil from going parabolic on him. And it will. In 2023, oil will be back over $100 a barrel. He can't stop it. All their games are over, and gasoline usage is up, petroleum uses are up. And if China opens up, it's game over, Phil. And look, and you were talking about eggs. Eggs went up in my area. They went up almost 300%. I don't know what this 70% garbage is.
Right.
It's skyrocketed. In fact, they said wholesale eggs have been cut in half. It's not reflected in the stores. I think what's happening now is that retailers are holding on to the price as long as they can. I've not gone to a restaurant where food prices have gone down and the retail cost of the dinner has not gone down. So I think what they're doing now is everybody's holding these as high watermarks, they're trying to hold the price. And I think it's ultimately going to kill people. And this next chart does not say what really is happening here. Is Bank of America saying retail reports coming out tomorrow is going to be higher than what people are expecting, much higher than December. But, it doesn't necessarily reflect that consumer is happy and robust. It's reflecting the fact that people have to spend more in order to simply live. And if you flip back to the slide before, Phil, if you can do that pretty easily, look at real earnings are negative 1.8%, and look at this retail sales. It's jamming. And you know what that is? We did a podcast on this earlier, is on the credit card usage is going through the roof.
Right.
People are getting to the point where they're maxing out. And what's different this year than years past is that the Democrats don't control the House of Representatives. So they just can't start passing stimulus money again. It's going to run into a stone wall, and we got the debt limit on top of it. So I think it's problematic. The market, let's talk the market a little bit today, because the CPA report came in a smidgen hot. Although it's showing that it's trending down from a fake BLS standpoint, you would have thought the market would have reacted well to that, but the market struggled all day. In fact, I think it closed red, did it not?
It did slightly red. Yep.
Tomorrow's is the retail sales report. If it runs hot, we can expect a down market. And what people don't realize is that this is option expiration week, and usually what happens if you have Friday up, you usually get a Monday up follow through, and then that usually carries into Tuesday. They kind of pair up the week, and then Wednesday and Thursday they try to work the market range the other way down. And so if we get a report that's negative into a positioning where they want to kind of clean out these call buyers and these put sellers, is that it could be a pretty red day tomorrow. In fact, the dealer positioning is suggesting that we should see red tomorrow as well. And also, in addition to that, if I can do additions all day, is that the second half of February is, probability-wise, is one of the worst 2-week periods of the year. So we have a lot of things stepping up here in terms of negative thesis coming into the market. And really, if it wasn't for Tesla being up like crazy 6% today for some absurd reasoning, is that the market would have been down a lot more, especially tech.
No, I agree. In fact, let's just show the chart real quick to wrap up. Yeah, Bob. So the chart, I think the thing is here, let me make this side bigger. I mean, obviously you can see we're still well over euphoria. We're expecting that snap down. But what I've been noticing is that we keep attacking this 4,000 area, and we're getting lower bounces off of it. So I think I would watch today's low. This is the daily chart tomorrow. If we start breaking below that, and especially if we start breaking below the weekly, if we look at the weekly, you'll notice the weekly's just been stair-stepping higher. Right? They call that one time framing up. So if the weekly closes below last week's low, which I think is 4070 on SPX, if I'm not mistaken, that's where this could kind of start turning the tide here. So that's a level to keep an eye on this week as we march forward toward OPEX. But yeah, an interesting day nonetheless.
Yeah, I mean, didn't you even say, Phil, that it smelled like distribution?
Yeah. If you look areas where they've done that in the past, I mean, an area like this, right? Distribution, and then you lose the whole range, although that held a higher high. But you get this activity where you kind of chop in a range here. And if this is really distribution, then what will happen is you're going to get a move that'll take out that swing low from a couple days ago. And this will come back and we'll get that snapback down move that we've been expecting. Similar to here as well, where basically comes down to the fair value from the euphoric levels like it does every single time.
Yeah, I mean, this is a closed loop system. It can't push up indefinitely because the system has natural boundaries that force it back. And what we mean by distribution is that when you're a big player in the market, you just simply can't sell because you get crushed. So you have to create actually positive environments so that people desperately want to take the shares off your hands. And they did a little bit of that today too, with the sell-off and then the rip and then the sell-off and then the rip, and then now we closed a little bit weak. So every time it gets up there, they're able to pawn off more shares to you, and for them to continue to lighten their positioning up, or even if they don't want to lighten their positioning up, that they can go ahead and grab cheaper protection out into the future to protect their portfolio. And And that's what I'm seeing. So nothing's changed in my mind, Phil. That what I'm worried about is the CPI report's going to become irrelevant, even if it goes flat, because the differential between what people make and what people have to pay for things, you'll start seeing basically a fall off in sales and on unit sales because people just can't afford it.
Yeah, it's going to be an interesting year in that regard, but I agree with you that that's going to play a part in it.
Yeah, me too. Tomorrow maybe we'll talk to retail sales a little bit more and kind of dive a little bit deeper into that because that's really the soul of the U.S. economy is the consumer. So let's kind of see what we could find about what they're thinking and how they're feeling. Maybe we'll do a podcast on that tomorrow.
Agree. All right, guys, well, that's going to do it. Thanks for watching. Please hit like and subscribe and check out that newsletter if you're interested. And we will see you on tomorrow's video. Take care. Bye-bye.
Trade Genius.